Have you ever lost one trade, then told yourself, I just need one more trade to get it back? And suddenly the losses became much bigger? If this sounds familiar, you are not a bad trader. You are experiencing revenge trading. What is revenge trading? Revenge trading is when you trade to recover a loss emotionally instead of following your trading plan logically. You are no longer trading the market. You are fighting the last loss. Psychologically, this happens when emotion replaces rules. Think of it like this. Emotion is fire. Your trading rules are water. When you lose discipline, the fire spreads. The real cause, trading psychology. A loss triggers three things. Ego. I should not be wrong. Fear. I must make it back. Anger. The market took my money. At this moment, your brain switches mode. You move from plan-based thinking to impulse-based action. Instead of asking, is this a good setup? You ask, how fast can I recover? This is where discipline disappears. Why revenge trading always ends badly. Revenge trading creates a loss spiral. Step 1, you lose a normal trade. Step 2, you increase position size. Step 3, you enter without confirmation. Step 4, you break risk rules. Step 5, losses compound. This leads to overtrading, emotional exhaustion, account damage. The market does not punish emotions, it simply exposes them. 5 practical rules to stop revenge trading. Rule 1, fixed risk per trade. Decide your risk before the trade. For example, one small fixed percentage per trade. Never increase risk to make it back. Rule 2, daily loss limit, hard stop. Set a maximum daily loss. Once hit, you stop trading, no exceptions. This rule protects you from yourself. Rule 3, mandatory cool down after a loss. After a loss, step away, 5 minutes, 10 minutes, 1 hour. No charts, no trades. Emotion needs time to cool down. Rule 4, trade only at planned times. Professional traders trade scheduled sessions, not emotions. If it's not your trading time, you don't trade, no matter how tempting. Rule 5, journal emotions, not just entries. Don't just write entries and exits. Write how you felt. Angry, rushed, calm. Patterns in emotions reveal future mistakes. Discipline is not talent, it is a system. Professionals see losses as business expenses, not personal attacks. One trade means nothing, one day means nothing. What matters is consistency over time. Your job is not to win every trade. Your job is to protect capital and follow rules. If you control risk, you control survival. If you control emotions, you control execution. Protect your capital first. Profits come second. If this helped you, like the video, subscribe and comment below. Have you ever revenge traded? You're not alone, and you can fix it.